Hi, hello champions. Good morning. Today I'm starting with the first class in our revision batch. Throughout the video, I'm going to discuss some of the basic concepts which is very important to understand the subject called as the cost and management accounting. So have the patience and watch the full video to get the conceptual clarity of the subject. Okay, without wasting the time, I am starting with the subject called as the cost and management accounting. Let us understand first what is accounting. Accounting means recording of money related transactions, which is already known by you. You would have studied in the foundation level. It is just recording of the money related transactions. That we are going to call it as the accounting. But what we need to learn in the CA intermediate is that there are three types of accounting. Number one, financial accounting. Number two, management accounting. And number three, cost accounting. These three types of accounting has different purposes. When it comes to financial accounting, look into this. When it comes to the financial accounting, it is the process of recording, classifying, summarizing, and reporting the business related transactions. The main motive of the financial accounting is to report the business related transactions to the management by preparing the financial statements. The main agenda of the financial accounting is to prepare the financial statements. When it comes to management accounting, the main motive is supporting the decision making by the management. So in management accounting, we are going to analyze financial and non-financial data, and we are going to report to the management certain information which helps in decision making to achieve the organizational goals. We know that every organization has the certain goals. To achieve that goals, management has to make decisions. To support the decisions, we are going to provide information to the management that we are going to do it under the management accounting. When it comes to cost accounting, it is all about ascertaining and controlling the cost. The main purpose of the cost accounting system is ascertaining the cost. What do you mean by ascertaining the cost? Suppose if you are manufacturing this remote, we need to know what is the cost incurred to manufacture this remote. That is called the ascertaining the cost and controlling the cost. Whenever there is some non-value added activities performed in the company, which is not going to have any value addition, such kind of activities we need to identify and we need to remove. By removing that, the company can save the cost, which is called the controlling the cost. This can be done only in the cost accounting. So when it comes to cost accounting, the main purpose is one is ascertaining the cost of the product and controlling the cost. I hope you get the difference between financial accounting, cost accounting, management accounting. Financial accounting is all about reporting the business related transactions. Management accounting is to support the decision making. Cost accounting is about ascertaining the cost and controlling the cost. Now, let us see in our syllabus. In our syllabus, we are going to discuss cost accounting and management accounting. Under cost accounting, we have 11 chapters. Under management accounting, just we have only 3 chapters. What are the 3 chapters under management accounting means? Number 1, standard costing. Number 2, marginal costing. Number 3, budgetary control. These 3 chapters are under management accounting. When it comes to cost accounting, we are going to have cost sheet, material costing, labor costing, overheads, ABC costing, job costing, unit costing, cost accounting system, service costing, joint product by product, process costing. This is the 11 chapters under the cost accounting. Okay, without wasting time, let us start with the cost accounting and basics of the cost accounting. Look at here. First, let us understand what is cost. See here. Cost means any sacrifice made for the purpose of carrying on business or profession and which could be quantifiable in monetary terms. So please understand three conditions should be there to consider any amount as a cost. Number one, there should be a sacrifice. This sacrifice mode is going to replicate the opportunity cost. When we have the two options, by choosing one option, when we have the two alternatives, when you choose one alternative, the benefit getting from the another alternative we are going to lose. That we are going to treat it as a cost, which is going to call it the opportunity cost. And it should be for the purpose of business or profession, and it should be quantifiable in monetary terms. So there should be a sacrifice, should be for the purpose of business or profession, and number three, it should be quantifiable in monetary terms. Then only we are going to consider it as the cost. So this is the simple definition to understand what is cost. According to the institute study material, they given the definition of cost: the amount of expenditure, actual or notional. Actual or notional. That notional expenditure is the opportunity cost. Okay, incurred on or attributable to a specified article, product, activity. That amount will be considered as the cost. Let us discuss one of the important thing: cost classification. Please understand, according to the purpose, according to the requirement, we are classifying the cost in different categories. There are three different types of classifications. Number one, for the purpose of stock valuation and profit calculation. Number two, for the purpose of decision making. Number three, for the purpose of control. These are the three main purposes for the cost classification when it comes to stock valuation and profit calculation. See here, when the purpose is stock valuation and profit calculation, we are going to classify the cost into, see here, the first classification. The first classification is stock valuation and profit calculation. In that, the first classification is expired cost and expired cost. Second classification is manufacturing, administration, selling and distribution cost. Third classification is product cost, period cost, and the fourth classification is unit cost and job cost. Number two, decision making. When the purpose is decision making, they are going to classify the cost into variable, fixed, semi-variable cost, sunk cost, opportunity cost, and then marginal cost. When the purpose is control, they will classify the cost into controllable cost and uncontrollable cost. Okay, let us have the clarity on this cost classification. Let me start with the first one: expired cost and unexpired cost. See, please understand, before making the cost classification, we need to see what is the purpose. What is the purpose of calculation? Is it stock valuation profit calculation, or is it decision making, or is it control? Based on that, we need to classify the cost. Before going for that, let us understand what is the meaning of the product cost, period cost, what is the meaning of the variable cost, fixed cost. Let us understand each and everything. Let me start with the expired cost and unexpired cost. Please understand, this cost classification is based on netting of the cost against the sales. Simply, I can tell you, reducing the cost from the sales. Let me take an example to understand the expired cost and unexpired cost. Just let me take the example. See, total cost incurred equals to rupees 1 lakh, which is also called as the cost of production. From this, I am classifying into two categories. Let me take an example. This is the cost belongs to 1000 units. Out of this, goods sold, closing stock. When it comes to goods sold, 800 units has been sold, and when it comes to closing stock, 200 units are there. What is total cost of production? 1 lakh rupees belongs to the 1000 units. 1 lakh divided by 1000, which comes to 100 rupees per unit. I am taking the average cost per unit or average cost of production 100 rupees per unit. For 800 units, how much is the cost? Means 800 into rupees 100, which equals to rupees 80,000. For 200 units, 200 into rupees 100, which equals to 20,000. So please understand, total cost of goods sold. See, total cost of production is 1 lakh rupees. Out of that, cost of goods sold is 80,000 and closing stock value is 20,000. When it comes to profit calculation, let me write like this. Gross profit equal to, always will write sales minus cost of goods sold, which you already studied in the foundation level. Sales minus cost of goods sold will get gross profit. So here what I am doing, let me take an example. 1000 units has been sold at the rate of 120 rupees. What will happen? The sales comes to 1,20,000 rupees minus cost of goods sold is 80,000 rupees. So that gross profit is 40,000. So in this calculation, what is happening? The total cost incurred is 1 lakh rupees, but how much cost is reduced from the sales means 80,000. That 80,000 we are going to calculate as the expired cost. So what is expired cost? Means the cost whichever reduced from the sales, we are going to calculate as the expired cost. The cost which is not reduced, or I can call you, or I can call, I'm going to calculate in different form. The cost which carry forward to next accounting period. Please understand, the closing stock of the current period will take it to the next period in the name of opening stock. I hope you are understanding. Hello. So please understand, what is expired cost? Means the cost which is reduced from the sales is called the expired cost. The cost which carry forward to next accounting period is called the unexpired cost. Very simple. Expired cost, unexpired cost is that classification depends upon the reducing from the sales. Whichever the cost reduced from the sales, expired cost. The cost which carry forward to next accounting period is called the unexpired cost. Or the cost which is not reduced from the sales is called the unexpired cost. The example for the expired cost is cost of goods sold. The example for the expired cost is cost of goods sold. The example for the unexpired cost is closing stock. I hope you got the point. Okay, now next. Look at here. Expired cost. Charged against the current year revenue. Nothing but reduced from the current year revenue is called the expired cost. Unexpired cost carry forward to next accounting year. Whichever the cost carry forward to next accounting year is called as unexpired cost. Clear? Next. Manufacturing, administration, selling and distribution. This classification depends upon place of incurring the expenditure. Place of incurring the expenditure. Where we are incurring the expenditure, that is very important. Please understand, if you take a manufacturing company, we can broadly classify into three categories. First one, factory, where they produce the product. Corporate office, at last sales office. If you take a manufacturing company, what is the main activity? They'll purchase the raw material, convert into or process it into finished good, and they sell it in the market. You take any manufacturing company, they'll do the same activity. Let me take an example, Tata Motors. When it comes to Tata Motors, they're into the automobile sector. They'll be purchasing different raw materials, plastic, rubber, glass, metals, different types of metals. They'll be purchasing different types of raw materials, and after processing, they'll convert into a car form and they sell it in the market. The place where they convert this raw material into finished good, we're going to call it as the factory. Sometimes they'll be called it as manufacturing plant. And there'll be one corporate office which is going to handle all the operations of the company. They'll take care of all the purchases, sales, salaries, operational cost. Everything will be taken care from the corporate office. And sales office is just to promote the sales. So why I'm explaining this means whichever the cost incurred in the factory, whatever the cost incurred in the factory, we are going to call it as the manufacturing cost. Simple. What is manufacturing cost means expense incurred. Expense incurred in the factory. What all the expense incurred in the factory, we are going to call it as the manufacturing cost. Or to elaborate that expense incurred from the purchase of raw material till the primary packing of the finished goods is we are going to call it as the manufacturing cost. Okay, that is about manufacturing cost. Next, administration cost. What is administration cost? Expense incurred in the corporate office. What all the expense incurred in the corporate office, we are going to call it as the administration cost. What is selling cost? Expenditure incurred to promote the sales. The best examples is advertisement, samples distribution, sales commission paid to the sales boys. All these things comes under the selling expenses. When it comes to distribution expenses, expense incurred to dispatch the goods from the warehouse to the customer. From the production place to the customer, what all the expense incurred to distribute the product, we are going to call it as the distribution cost. Delivery van maintenance, delivery boy salaries, warehouse rent, all these things comes under the distribution cost. I hope you got the clarity. When it comes to manufacturing, administration, selling and distribution, it is the classification depends upon place where we are incurring the expenditure. If the expense is incurred in the factory, we are going to call it as the manufacturing cost. If the expense incurred in the corporate office, we are going to call it as administration cost. Expense incurred to promote the sales, we are going to call it as selling cost. And expense incurred to dispatch the goods from the warehouse to the customer place, we are going to call it as the distribution cost. This classification is based on the place of incurrence. Keep it in mind. Okay, now look at here. Manufacturing cost. As in given here, from the purchase of raw material till primary packing. From the purchase of raw material till primary packing, what all the cost incurred, we are going to call it as manufacturing cost. In simple form, incurred in factory. Expense incurred in factory. Okay, now. And one more thing what we need to understand is classification within the manufacturing cost. So cost classified into 4 categories. Just now we discussed that. Now manufacturing cost again classified into 3 categories. What are the 3 categories? Means material, labor, expenses. Manufacturing cost classified into 3 categories. Look at here. Manufacturing cost classified into material, labor, expenses. This material, labor, expenses again subdivided into direct material, indirect material, direct labor, direct expenses, indirect expenses. Let us understand this. What is direct material? The material which can be traced to the final product or economically identified in the final product, such material we are going to call it as the direct material. I'll give the example. Let me take an example. Fabric purchase to stitch this t-shirt. For me, I require 2.5 meters to stitch one t-shirt. So I'm able to trace raw material with the final product. To get the final output, the input should be 2.5 meters of the fabric. Like that, if you are able to trace such kind of material is called the direct material. The best example is fabric for the clothes, plywood sheets for the furniture, iron rods for the furniture. Just I am mentioning some of the examples. Look at here. For direct material, the best example is wood in the furniture. We can quantify how many sheets required to get the furniture as a how many sheets required to be consumed to get the output of the furniture. Fabric in the clothes. fabric in the clothes, 2.5 meter, 1.5 meter. It depends upon the size of the body. Okay, now, so this is about the direct material. Next, direct labor. Who is direct labor means the one who is directly engaged in the production process. Let me take an example. In a factory, workers are the direct workers. And one more thing, direct labor means the labor cost which can be traced to the product. When it comes to the workers in the factory, they are going to get the wages on time basis or piece basis. Let me take an example, piece basis. For the production of one piece, they are going to get 10 rupees means labor cost can be traced to the product. Labor cost can be traced to the product. How? Each piece 10 rupees is the labor cost. Are you getting the point? What is direct and indirect means? The direct means the cost is able to trace to the object. The cost that can be identified with the object completion. Such kind of cost is called the direct cost. What is indirect cost means? The cost which cannot be traced. When it comes to the direct labors, workers in the factory are the direct workers. Chef in the canteen is a direct worker. Mechanics in the repairs and maintenance department is a direct workers. Are you understanding? So look at here. Labor at factory, workers at construction, chef in the canteen. These are the examples for the direct who is directly engaged in the production and their cost can be traced to the final product. Got it? Same way direct expenses other than material and labor. Other than material and labor, what all the expense incurred, what all the cost incurred, we are going to call it as the expenses. In that, what is direct expense means? The expense which can be traced to the finished good, which can be identified to the finished good. I'll give you the example. Royalty paid. The royalty will be paid based on the output or based on the production. For every 1 unit of production, the royalty will be paid 5 rupees. So 5 rupees is a direct expense. Are you understanding? All of you. So what is direct expense means? Expense has been incurred and can be identified with the one good, that can be identified with the one product. Such expense is called as the direct expenses. Okay, now one more example. Cost of defective work. So royalty just to explain you cost of defective work. So once this product get completed, they identified some defective. To rectify that defective, they are going to incur some additional cost. That cost has been specifically incurred for this product. When it is incurred for this product, they are going to add that cost to this product. So cost of defective work is one more example for the direct expenses. Now what we need to understand is indirect material, indirect labor, indirect expenses. What is indirect material? The material which cannot be traced to the finished good or which cannot be identified with the finished goods. Here, when it comes to indirect material, lubricants is the best example. Lubricants is used for the smooth functioning of the machineries. We cannot trace how many liters of lubricants has been consumed to produce one single product. We cannot trace like that. You already know that for the smooth functioning of the machineries, the mechanics will be applying grease, oils to the machineries. For the production of one single product, how much grease has been consumed means we cannot trace like that. We cannot identify like that. So simply I can tell you what is indirect material means the material which cannot be traced with the final product, which cannot be traced to the final product accurately. Such kind of material is called the indirect materials. Okay, now see here. Next, safety wear. Safety wear wearing by the workers. These are all the indirect material. And one more thing, floor cleaning materials, machine cleaning oils. Machine cleaning oils, floor cleaning oils. Are you understanding? These all things are the indirect materials. Next, indirect labor. Who is indirect labor means the one who is not directly engaged in the production process. They are not going to produce the product. That is one thing. And one more thing, their cost cannot be traced to the good. Their cost cannot be traced to one single product. The best example is supervisors and foremen, security guard, janitors. The people who janitors means the people who clean the premises. Okay, now, so these are the indirect labors: supervisors, managers, security guards, janitors, housekeeping people. All these people comes under the indirect labor because their cost cannot be traced to the product. Once this product is out, we can say how much is the labor cost incurred on this, like direct workers cost, but we cannot quantify how much is the salary of the manager to be added directly. I mean to say directly cannot be traced to the product. So whichever the cost cannot be traced directly, we are going to call it as the indirect labor. Okay, indirect expenses, simply I can tell you, other than direct expenses, any expense is an indirect expense. Any expense is an indirect expense. Okay, so this is the classification under the manufacturing cost. Please understand, manufacturing cost classified into 6 categories: direct material, direct labor, indirect labor, direct expenses, indirect expenses. Okay, now one more thing what we need to understand is, if you make a total of all the direct elements, we are going to call it as the prime cost. See, look at here. When we have direct material, direct labor, direct expenses, we'll be calling it as prime cost. If you add indirect material, indirect labor, indirect expenses, we are going to call it as the overheads. These overheads again classified into production overheads, administration overheads, selling and distribution overheads. From now onwards, what you need to remember is that whenever I say overheads, it's a sum of indirect material, indirect labor, indirect expenses. Especially manufacturing overheads, I can call it as the manufacturing overheads, because manufacturing cost related expenses, if you add indirect material, indirect labor, indirect expenses, we can call it as the manufacturing overheads. Clear? Okay, now let us start with the next classification, very important classification: product cost and period cost. Very important classification, because in many places we are going to use that classification. Okay, now look at this: product cost, period cost. This product cost, period cost. This classification is based on stock valuation. Product cost, period cost classification is based on the stock valuation. Whichever the cost, there will be multiple expense will be incurred. What all the expense or what all the cost considered for the stock valuation, we are going to call it as the product cost. The cost which is not going to consider for stock valuation, we are going to call it as the period cost. Please understand, simple product cost, period cost classification is based on the stock valuation. Whichever the cost considered for stock valuation, we will call it as product cost. Whichever the cost is not considered for stock valuation, we are going to call it as the period cost. Simply I can tell you, all manufacturing costs are product cost. Why? Because stock will be valued at manufacturing cost. You already studied in the foundation. Stock will be valued at manufacturing cost. So all manufacturing costs are product cost. All non-manufacturing costs are period cost. What are the non-manufacturing costs? Please understand. What is the non-manufacturing means? Administration, selling and distribution is the non-manufacturing. Are you understanding? All of you. So, product cost, period cost classification based on stock valuation. Whichever the cost considered for stock valuation is called product cost. Whichever the cost is not considered for stock valuation is called period cost. All manufacturing costs are product cost. All non-manufacturing costs are period cost. Okay. Product cost will be debited to trading account. Period cost will be debited to P&L account. Last one and very important one, product cost will be expired to the extent of goods sold, unexpired to the extent of the closing stock, whereas period cost will expire fully. Sir, what is this? Please understand, when it comes to product cost, just I told you, considered for the stock valuation. What is the cost that is considered for stock valuation means? Please understand, cost of production. Using cost of production only, we are going to evaluate the stock. Just I given you the example, 1000 units has been produced. Out of that, 800 units has been sold and 200 units lying as a closing stock. When we are calculating the profit, we are netting off 800 units cost. We are calculating 800 units cost and we are reducing the 800 units cost because the unit sold is 800 and the cost carry forward to next accounting period is closing stock. Are understanding? So when it comes to product cost, it will expire to the extent of goods sold and unexpired to the extent of the closing stock. When it comes to period cost, it will expire full. Okay, now. Okay, next. Let us start with the next classification, unit cost and job cost. What is this unit cost and job cost means? Please understand, these are not the two different costs. These are not the two different cost elements. This is the two different methods of valuation. Unit cost and job cost are the two different methods of valuation. Sir, what is unit costing method? What is unit costing method means? When the company is producing the product which is going to have the similar type of output, the company is producing the product and which is going to have the similar type of output, then they are going to follow the unit costing method. When the output is dissimilar, then they follow the job costing method. I will give you the example. Let me take an example. Pen manufacturing company, Reynolds. The output is similar. They will follow the unit costing. So please understand, unit costing, job costing depends upon type of product produced by the company. Which method has to be followed depends upon type of product produced by the company. If the company is producing similar type of products, they'll follow unit costing method. If the company is producing dissimilar products, they'll follow job costing method. As I given you the example, Reynolds company will always follow the unit costing method. When it comes to Infosys, which is into the software development, they will follow the job costing. When it comes to software development, there will be no similar softwares that can be developed by the companies. All are different types of softwares. So what I mean to say is that when the output is similar, follow the unit costing. When the output is dissimilar, follow the job costing. When they follow unit costing, they are going to evaluate the product on an average basis. When they follow job costing, each and every product will be valued separately. I'll give the example. Here, Reynolds. Here, I took the L&T construction company or Infosys. When it comes to Reynolds company, 10,000 rupees incurred to produce 1000 pens. 10,000 rupees incurred to produce 1000 pens. How much is the cost per pen? Means 10,000 divided by 1000. Cost per pen. Cost per pen equal to rupees 10. And the profit, which equals to 5, together comes to 15 rupees. 15 rupees is the selling price. Okay, now when it comes to L&T construction company or Infosys, the output is dissimilar. We cannot take the average. Please understand, in unit costing we can take the average because all are similar products. No need to evaluate separately. When it comes to job costing, we have to evaluate each and every project separately. In case of L&T construction company, when it comes to Infosys, each and every software has to be evaluated separately. Are you understanding? If you take L&T construction company, one of the project in Bangalore, another project in Chennai. Bangalore project will be valued separately and Chennai project will be valued separately. Are you understanding? All of you. So, unit costing, job costing are the methods of costing. Which method has to be followed depends upon output. If the output is similar, follow the unit costing method. If the output is dissimilar, follow the job costing method. If it is similar, take the average cost. If it is dissimilar, evaluate independently or individually or separately. As I given you the example, Reynolds company will follow the unit costing and they'll take the average cost per pen. When it comes to Infosys and L&T construction company, each and every project will be valued separately. They cannot take the average. They'll evaluate independently. So these are the two different methods of costing for the stock valuation. All of you clear about this? So this is about stock valuation and profit calculation. So the first classification, expired cost, unexpired cost, is based on deduction from the sales, reduction from the reduced from the sales. Whichever the cost reduced from the sales is an expired cost. Whichever the cost does not reduce and carry forward to next accounting period is called an unexpired cost. Next, manufacturing, administration, selling and distribution. This depends upon place of incurrence. If the expense is incurred in the factory, manufacturing cost. If So starting with the next classification, let us summarize once what we discussed under the stock valuation and profit calculation. The first point is the first classification is expired cost and unexpired cost. This classification depends upon reducing the cost from the sales. Whichever the cost reduced from the sales, we are going to call it as the expired cost. Whichever the cost without reducing from the sales, if you carry forward to next accounting period, we are going to call it as the unexpired cost. Example of the expired cost is cost of goods sold. Example of the unexpired cost is closing stock. Next classification, manufacturing, administration, selling and distribution. This depends upon place of incurring the expenditure. If the expense is incurred in factory, we are going to call it as the manufacturing cost. If the expense is incurred in the corporate office, we are going to call it as administration cost. If the expense is incurred from the promotion of sales, we are going to call it as selling cost. And if the expense is incurred to dispatch the goods, we are going to call it as the distribution cost. And one more thing, manufacturing cost is again classified into material, labor, expenses. All these three again subdivided into direct and indirect. If you make a total of all the direct elements, we are going to call it as prime cost or direct cost. If you make the total of all the indirect elements, we are going to call it as the overheads. Now, we had seen one more important classification, product cost and period cost. What is product cost? The cost which is considered for stock valuation. And one more thing, this classification of product cost, period cost is depends upon the stock valuation. Whichever the cost considered for stock valuation, we will call it a product cost. Whichever the cost not considered for stock valuation, we are going to call it as period cost. Basically, all manufacturing costs are product cost. All non-manufacturing costs are period cost. Are you understanding? We already know that stock should always valued at manufacturing cost. Stock should always valued at manufacturing cost. Non-manufacturing, sir, what is non-manufacturing? Administration, selling and distribution. We are not going to consider for the stock valuation. So all manufacturing costs are product cost, all non-manufacturing costs are period cost. Product cost will be debited to trading account, whereas period cost will be debited to P&L account. And one more thing, product cost will expire to the extent of the goods sold, unexpired to the extent of the closing stock, whereas period cost will expire fully. And then we have seen one more classification called as the unit cost and job costing. It is the methods of valuating the stocks. Unit cost and job cost is not the cost classification. These are the two different methods to evaluate the stock. When the output is similar, they'll take the average. That method is called unit costing. When the output is dissimilar, each and every project will be valued separately. That method is called as the job costing. Are you understanding? All of you clear till now? Okay, now let me start with one more classification and very important classification: variable, fixed, and semi-variable cost. You already know that when I ask you variable cost, what is variable cost means? The cost which vary. What is fixed cost means? The cost which is fixed. But we need to have in-depth understanding of the variable cost and fixed cost. We need to understand the nature. Generally, we call it as this classification is based on the nature, variable nature, fixed nature, semi-variable nature, based on nature. We need to understand the nature in clear form, in-depth form. Whatever the understanding that we had is in the totals. There is one more form for the cost called the per unit. Let us understand that. Let me take the example for this. Let us understand this here. The target is to understand, initially we'll understand variable and fixed cost. Material cost, which is a variable cost. Let me take an example per unit, 5 rupees. Next, factory rent, which is a fixed cost. Let me take an example, 12,000. Okay, now I will take units, variable cost, fixed cost, total cost, variable cost per unit, fixed cost per unit, total cost per unit. Let me take an example. The company is producing 1000 units. I am taking two cost elements. One is material cost, one more thing is factory rent. We all know that material cost is a variable, factory rent is a fixed. Let me take an example. The company is manufacturing 1000 units. To produce 1000 units, how much is the total variable cost? Means 1000 units into variable cost per unit, according to our example, is 5 rupees. So 5 into 1000, 5000. When it comes to fixed cost, it is 12,000. When it comes to total cost, it is 17,000. And one more thing, after watching the video, whatever the doubts that you are having, please mention it under the comment section. Definitely, I'll respond to that. Whatever the doubt that you have, you just mention in the comment section. Okay? Yeah. Variable cost per unit is 5 rupees and fixed cost per unit. How to calculate fixed cost per unit? 12,000 rupees is the total. Number of units is 1000. So 12,000 divided by 1000, it is 12 rupees. Total cost per unit comes to 17 rupees. Clear? Next. I am taking one more scenario. Scenario 2. The company is producing 2000 units. So 2000 units into 5, which comes to 10,000. And fixed cost is going to change in total? Absolutely no. You may produce 1000, 2000, 20,000. Your rent will be 12,000. So I am taking here fixed cost 12,000. Total cost comes to 22,000. When it comes to variable cost per unit is always 5 rupees. It is not going to change. And fixed cost per unit. How to calculate fixed cost per unit? 12,000 divided by 2,000. Earlier we are producing 1000, but now we are producing 2000. So it comes to 6 rupees. When it comes to total cost per unit, it comes to 11 rupees. So what we need to understand, is that when it comes to variable cost, it changes. It changes in what? It changes in total. In foundation level, what we understand is that variable cost will change, fixed cost will be constant. But what we need to understand now, it is the time to learn. Variable cost changes in total, whereas constant in per unit. Variable cost changes, yes. In what form? In total form. Whereas it is constant in per unit. When it comes to fixed cost, it is constant in total but changes in per unit. So please understand, this is the old understanding or CA foundation level understanding. This is the thing which we need to understand at the CA inter. Are you understanding? So what we learned is in totals. Variable cost changes in total, fixed cost is constant in total. What we are learning is per unit. Variable cost is constant per unit, variable cost is constant per unit, whereas fixed cost per unit changes. When it comes to variable cost in total, increases with increase in production, decreases with decrease in production. When it comes to fixed cost per unit, listen, fixed cost per unit. decreases with increase in production and increases with decrease in production. Let us understand this properly. Let us understand this properly. Total is 12,000. Total is 12,000. Initially, in the scenario 1, we are producing 1,000 units. We are producing 1,000 units. So 12,000 divided by 1,000 per unit, 12 rupees. That means what is happening here? The 12,000 rupees cost is sharing by the 1,000 units. In the scenario 2, the same 12,000 is sharing by 2,000 units. So per unit decrease from 12 rupees to 6 rupees. Are you understanding? All of you. So what we need to understand is that nature. What is the nature of variable cost? Nature of variable cost is changes in total, constant in per unit. What is the nature of fixed cost? Constant in total, changes in per unit. Most of the people would have been confused. Nothing to confuse. Very simple. Totals per unit. We need to compare these two. What is the nature in terms of total and what is the nature in terms of per unit? Variable cost changes in total, constant in per unit. Fixed cost constant in total, changes in per unit. Clear? Okay. So this is about the variable cost and fixed cost. We need to understand one more thing called as the semi-variable cost. What is the semi-variable cost? Let me take the example. Units, amount. 1,000 units, 2,000 units. Amount comes to 17,022. This is the information given. Nothing else has been provided. Nothing else is provided. This is the information. By looking at this information, we need to identify whether the given information is variable cost or fixed cost. Okay. Instead of amount, let me take it as a cost. Instead of amount, let me take it as a cost. Just by looking at this information, we need to identify the given cost is variable or fixed. Number one, is it a fixed cost? Just think, is it a fixed cost? The answer is no. Why no? Totals are not same. Total is changing. What is the fixed cost nature? Constant in total. Here it is not constant in total, so it is not a fixed cost. No. Is it a variable cost? What is the condition? Per unit should be same. To take it as a variable cost, per unit should be same. In the first scenario, how much is per unit? Rupees 17. In the second scenario, how much is per unit? Rupees 11. Per unit is also not same. Per unit is not same. Total is not same. So it is not a variable cost. It is not a fixed cost. Then what is the semi-variable cost? Which is also called the semi-fixed cost. So what is this semi-variable cost? Partly variable, partly fixed. Portion of the amount is variable cost and portion of amount is fixed cost. Such thing we are going to call it as the semi-variable cost. Please understand, there is a specific nature for the variable cost and there is a specific nature for the fixed cost. Variable cost is constant in per unit, fixed cost is constant in total. When it comes to semi-variable cost, there is no constant nature. Whenever you want to make the decision, there should be some constant nature. So what we need to do, this semi-variable cost, we need to classify into variable cost and fixed cost. Whenever you find the semi-variable cost, which is also called as the semi-fixed cost, first you classify that into variable cost and fixed cost. How to do that? How to identify that? How to calculate that? First, we will calculate variable cost per unit, nothing but change in cost divided by change in units. Please understand. Listen. Now, 1,000 units become 2,000. How much is the increase in units? 1,000 units. By increasing 1,000 units, 17,000 become 22,000. By increasing 1,000 units, 17,000 become 22,000. So what is the increase in cost? 5,000 rupees. So please understand, change in cost is 5,000 for the change of 1,000 units. Am I correct? Change in cost is 5,000 for the change of 1,000 units. Here you need to understand one more thing. What is the reason for the change in 5,000 increase in units? I know that. Now what we need to understand is that 5,000 rupees has been increased. Is it because of variable cost or is it because of fixed cost? Means the answer is variable cost. Why it is variable cost? Why? Because fixed cost is constant in total. It will never change. Fixed cost is constant in total. Whereas variable cost changes in total. So the change of 5,000 happened because of variable cost. So I am going to calculate variable cost per unit by taking change in cost divided by change in units. The change in cost is 5,000 because of variable cost, and because of how many units means 1,000 units. So per unit how much means 5 rupees. So 5 rupees per unit is the variable cost per unit. Understanding? Now I need to know out of this 17,000, how much is the variable cost and how much is the fixed cost? How to calculate that? Variable cost per unit is 5 rupees. 5 rupees into 1,000. Variable cost is 5,000 rupees. 5 rupees into 1,000, 5,000 rupees. Totally 17,000. Out of 17,000, I know the variable cost 5,000. So how much is the fixed cost? 12,000. So 17,000 is the semi-variable cost. Now I am calculating variable cost and fixed cost by calculating the variable cost per unit. Same way, I can classify this 22,000 into variable cost and fixed cost. How to do that? 5 rupees per unit. 5 rupees per unit into how many units? 2,000 units. 2,000 into 5 rupees. 10,000 is the variable cost. So how much is the fixed cost? 12,000. Like this, we need to classify the semi-variable cost into variable cost and fixed cost. So once you calculate the variable cost per unit, we'll calculate total variable cost, that is units into variable cost per unit, and fixed cost equal to total cost minus variable cost. Total cost minus variable cost. All of it clear? I hope you are understanding what I'm explaining. This is one more very important classification. This helps in the management accounting, standard costing, marginal costing, budgetary control. In those chapters, this classification has a great impact because there the purpose is decision making. So we need to classify the cost into variable, fixed, and semi-variable. Clear? Okay. Now let us start with the next one called as the sunk cost. Listen. What is sunk cost? Means historical cost. What is sunk cost? Means historical cost. One more name for the sunk cost is historical cost. Nothing but cost incurred in the past. Please understand, sunk cost is nothing but historical cost. Nothing but cost incurred in the past. And one more point, irrelevant for decision making. Irrelevant for decision making. So please understand, very simple, sunk cost is a historical cost. Okay, today let me take an example. Yesterday, what are the cost incurred in the yesterday and before that is called the sunk cost. The minute before of this, whatever the cost that I am spending, today morning I had a coffee by paying 25 rupees. The 25 rupees is sunk cost for me. Today afternoon I am going to have the lunch. That is my future cost. That is not the sunk cost. Sunk cost means cost incurred in the past, and it is irrelevant for the decision making. Sunk cost is irrelevant. Sir, why it is irrelevant for the decision making? Decision means what? Are you going to decide the future or past? Are you going to decide the future or past? We are going to decide the future. When you are going to make the decision regarding the future, why you want to consider the past cost? Past cost is irrelevant. Consider the future cost, consider the future revenue, make the decision. Why you want to consider the past cost? Are you understanding? Hello? So, sunk cost is a historical cost and it is irrelevant for the decision making. Decision is about future. Take the future cost and future revenue. Never consider the past cost. Clear? Okay? Now, don't ask me the examples. As I told you, whatever the cost incurred yesterday, day before that, everything is a sunk cost. It can be anything. It can be anything. It depends upon the when you incur the cost. When. In the past or future. If it is past, sunk cost. Clear? Next. Opportunity cost. Okay. To understand this, let me take the example. I hope you all know this person. The name of the person is CA Katappa. Just I am taking the example. Katappa has written the examination and he qualified CA finals. So we are going to call him as the CA Katappa. Once he get qualified, he found two opportunities. He found two opportunities after qualification. What are the opportunities means? Number one, employment, and number two, practice. So he's having two options now, two alternatives. Just I'm trying to explain you the opportunity cost. He's having two alternatives. One is employment, and one more thing is practice. He assessed himself and he concluded that if he go for the employment, he can make 12 lakhs per annum being a fresher. Being a fresher is a very good package. 12 lakhs per annum. By entering into the practice, he decided he can make in the first year he can make 10 lakh rupees. Just example I'm taking. If you go for the employment, he can make 12 lakh rupees, and if you go for the practice, he can make only 10 lakh rupees. Now the point is, by considering the financial fact, by considering the financial values, he is going to choose employment. He is going to avoid the practice. He cannot do both. You already know that he cannot do both. Either he can go for the employment or he can go for the practice. By taking the financial values into consideration, he will decide to go for the employment. Now the point is, he is losing this 10 lakh rupees. He is losing this 10 lakh rupees by choosing the alternative option of employment. He is having two alternatives. Out of that, one alternative has been selected, that is employment, and the second alternative and the second best alternative is practice. He is losing that, and the income what he lost is 10 lakh rupees. The 10 lakh rupees is called the opportunity cost. Sir, why it is opportunity cost? Because he has the opportunity to make the 10 lakh rupees by choosing the alternative option of 12 lakh rupees. He is losing the 10 lakh rupees. So the 10 lakh rupees we are going to consider as the opportunity cost. Then what is the opportunity cost means? Benefit lost. Listen, benefit lost by choosing the alternative option. Benefit foregone. The technical word is benefit foregone by choosing the alternative option is called as the opportunity cost. Clear? Understanding? Okay, next. Last one, marginal cost. I don't need to explain this. Many of you know about this. What is marginal cost means? Additional cost incurred to produce, additional cost incurred to produce one additional unit. Additional cost incurred to produce one additional unit is called as marginal cost. I will discuss this elaborately in the marginal costing chapter. Okay, so this is the classifications under the decision making. So we have to see the purpose. If it is decision making purpose, we need to take these four classifications: variable, fixed, semi-variable, sunk cost, marginal cost, opportunity cost. All of you clear about this? Understanding. And last one, control. When the purpose is control, we are going to have the controllable cost and uncontrollable cost with this. Very simple. If I ask you what is controllable cost means you say the cost which can be controlled. What is uncontrollable means you say the cost which cannot be controlled. But we need to understand in clear cut form what is mean by controllable cost and what do you mean by uncontrollable cost. What is controllable cost means controlled. See the cost that can be controlled, influenced by the action of the executive heading. The cost which can be influenced. Okay, let me put it in the simple form. Let me put it in the simple form. What is controllable cost means the cost which can be influenced by the specified person. The cost which can be influenced by the specified person is called controllable cost. What is uncontrollable means the cost which cannot be influenced by specified person. The cost which cannot be influenced by specified person is called uncontrollable cost. Let me take the example. I am taking the example of the factory. In a factory, there are two departments. One is production department and one more thing is purchase department. When it comes to production department, there will be a production manager. For the purchase department, there will be a purchase manager. Let me take one of the cost element, purchase cost. Purchase cost or purchase price. Who can influence or who can make the decisions regarding the purchase cost means purchase manager can influence the purchase cost. So for him it's a controllable. For him it's a controllable. Production manager cannot control. Production manager cannot influence the purchase price. Please understand purchase price can be influenced by the purchase manager. Production manager cannot influence the purchase price. Please understand this. The purchase manager will have the discussion with the supplier. These two, supplier and purchase manager, will bargain with each other and they'll come up with the price. Production manager cannot influence the decision. So for the production manager, purchase price is uncontrollable. But for the purchase manager, it's a controllable because he can influence the cost. I hope you understand what I mean to say. When it comes to purchase cost, that can be influenced by the purchase manager. So for him, it's a controllable. Production manager cannot influence. For him, it's uncontrollable. Clear? Next. Let me take an example. Labor cost. When it comes to labor cost, for purchase manager, it's a uncontrollable. He cannot influence the labor cost. But for production manager, it's a controllable. It's a control because he can influence the cost. Because production manager is going to decide what is the hourly rate. What is the hourly rate that need to be paid to the workers. So for production manager, it's a controllable. For purchase manager, it's a uncontrollable. With this example, I hope you got the clarity which is controllable and which is uncontrollable. If I'm able to control you, for me, you are controllable. If I'm not able to control you, for me, you are uncontrollable person or uncontrollable students. You got the clarity, I think so. So this is about the controllable cost and uncontrollable cost. So these are the basics which is very, very important in the upcoming chapters. You need to have a clear-cut understanding of this. I hope you are clear on this. Okay? Yeah.